Hey guys, it's Mark here, and in this video we're going to have a look at why the Terra Luna crash has caused all cryptocurrencies, or 99.5% of them, to plummet with it, okay, and what this means. And we're going to also explain why melt ups can occur also. So that's where you get a cascading effect where all the cryptocurrencies go up in price. I'm not saying that's going to happen shortly. I'm just saying why that happens and why certain currencies stand to gain those 30x and 100x moves when you go back into a bull run cycle. So I'll explain all of that in this particular video. So firstly, let's have a look at Terra and USD. Okay, so the basics of Terra and USD are simply that imagine if the price of UST is $1.01. So it's $1.01. Therefore, it users can swap using Terra Station's feature. They can swap 1 USD worth of Luna for 1 UST worth of USDT. Sorry, of UST. Sorry. So what that means is that if Luna is worth $1.01, but you're buying it for only $1, then you're profiting 1%. You're profiting that $1.01. So you can sell that, gain the value from that, and Terra maintains its peg back to $1. Okay, and the same vice versa. If Terra ends up being worth 99 cents, say, then users can do the opposite. They can swap 1 UST for 99 cents worth of 99 cents of Terra for $1 worth of Luna. Okay, so you end up with a swap and burn stuff going on. People are using bots and so forth. So this is happening very, very fast. So basically, buying and selling of Terra and UST happens to keep Terra algorithmically at $1, Terra USD. It's very important though that the Terra market cap is higher than the market cap for UST. UST. I keep getting mixed up with USDT Tether, but with UST. So that market cap it has to be higher because you have to have enough of this to be able to sell for a bank run on this. Okay, so that's very important. So the bigger the difference the peg is, though, from $1, the more profitable it is. But you also got to remember that look how much this is growing so fast. It happened very, very rapidly. The market cap of Terra USD was just going up and up and up and up and up. Yes, this was going up also. Some of this, though, was then sold and used to buy like $3.5 billion of Bitcoin, $100 million of Avalanche, and those purchases were going to be used in order to help maintain the peg here. Okay, they were going to be used for that. However, there was an issue with that, and I'll get to that shortly. I'll just get on to the next thing, just to explain that the other factor that caused so much people to put money into UST was Anchor Protocol, because Anchor Protocol was paying 20% interest, or 19.5% interest. So of course people are constantly putting money in. People were taking a mortgage from the bank and putting it into this, going, well, my mortgage is like 1% and this is 20%, or my mortgage is 5%. You know, I'll pocket the difference, right? Thinking that this is safe and secure. That 20% interest was attracting people to put. Some people put $50 million in, or $100 million. Like, it was attracting really high scale purchases from whales and so forth, and it was growing rapidly. Luna, obviously, as a result of keeping the peg, was gaining in price too a lot, but there was growing concern about whether or not, because of the rate of growth, whether or not it can handle a run on the bank, and that's why that purchase happened. You can see like the overall supply of Luna relative to here, you know, at different points in time, because of this sharp move upwards, all of a sudden loads of people bought UST, so they had to also mint a lot more Luna, like market supply, and then they had to burn a whole lot as well, just due to different price fluctuations and so forth along the way. It's kind of crazy how the whole thing works. So the problem is, when they bought the Bitcoin and the Avalanche, they were thinking, okay, if somebody goes ahead and does a run on the bank and they withdraw $50 million, doesn't matter, we've got $3.5 billion worth of Bitcoin. That's going to be no problem, because Bitcoin is a lot more liquid than any of the other currencies. It would just sell it and so forth, and it would buy it back later when, you know, someone else made a purchase and what have you, and it's going to be fine. But they bought the Bitcoin before they'd written the computer software to make that happen. So they actually had to react almost like a day or two later to start selling some Bitcoin to offset this. And it's just too late. Like, it's just isn't going to work. And that's why when the run on the bank happened, you know, like through on-chain analysis, there were two entities that took out $400 million of UST in a, you know, in the 24-hour period. It just wasn't. It caused a lot of other people to take money out and so forth when they saw the price dropping. It caused market panic and this negative feedback loop and so forth. Then people panicked and took money out of Avalanche and Bitcoin, thinking, oh, heck, they're going to have to sell like all this billions of dollars in Bitcoin. They're going to have to sell their 100 million in Avalanche. So those people took money out of those currencies too. And so there was a big overall meltdown that occurred. So here's how it happened. Bitcoin dropped 8.4%. It was already on a macro level not doing well because of the Fed interest rate hikes and the overall stock market going down. BTC moved with it. Big investors sold $285 million of UST simultaneously on Curve, Binance, Anchor, and other platforms. Eventually, it totaled $400 million by May 9. And big investors were also shorting Luna because they could see what was happening. Right away, bang, oh, this has happened, run on the bank. People that were preparing for it shorted Luna. UST lost its peg, while Luna dropped in value below that of UST. So that's how it played out, and look what happened. Kabang and kabang. All right? But that's just the beginning. That's just Luna. And that is really bad for those that hold Luna, but why did it drag everything else down with it? Okay, so this is what happened though. You've got your negative feedback loop going. You've got more Luna is being minted and sold to try and get the price of USDT up, and it's just constantly falling in value, so that keeps having to happen, and more, you know, and so massive hyperinflation going on Luna, the price going to nothing, some people not understanding the tokenomics, going in and buying Luna, helping fund the more, you know, it's just getting sold off for US, you know, minted, and more of it's getting minted and sold off for USD. It's just never going to work, but people, you know, I can understand, you know, not going to quite get that. And then, yeah, it was crazy. But then how did everything else get dragged down with it? Well, there are thousands of liquidity pools out there across so many different, like, layer ones, not just in the layer one itself, but in the various projects on the layer ones, and so forth. Now, firstly, I'll explain how a liquidity pool works, and then I'll say how Luna dragged the prices down of so many cryptocurrencies all at once. So what happened in a liquidity pool? So let's say in Phantom Deuce, I'm just going to make up a price of Phantom. This is not the price of Phantom. This is not the price of Deuce, DEUS, sorry. I'm just saying if it was, this is what it would be like. So let's say Phantom's $1, Deuce is $2. I don't even know what Deuce is, so it's probably some currency that's not called Deuce, by the way. I'm just calling it that because that's what the letters spell. But the liquidity pool deposit, let's say someone put in $1,000. Then at $1,000 at those prices, you'll have 500 Phantom and you'll have 250 Deuce. That's 500 each, right? Okay, so then let's say Phantom dropped to 90 cents. Okay, someone sold a bunch of Phantom. It's dropped to 90 cents. But Deuce, let's say it stayed the same. Then now your liquidity pool deposit is now worth $950 because your 500 Phantom are worth $450 and your Deuce is worth $500, right? So that's where you're at so far. But this pool has to maintain a one-to-one peg. So arbitrageurs step in, and these are using automated trading bots, by the way, and they will make them balance by selling some of the, I'll just move this over, selling some of the Deuce in order to buy some Phantom. And until that works out. So by selling some Deuce, it's affecting the price of Deuce. Deuce is dropping in price. Buying some Phantom is causing the price of Phantom to go up, right? So let's say this is one way it could potentially balance out. It might be that they needed to use sell off 10 Deuce and buy 16 Phantom, and it might have ended up that the price of Phantom went up to 92 cents. Deuce went down to $1.98. Now your liquidity pool is still $950, but you've got $475 worth of each. And that's the basics of how a liquidity pool works. But don't forget, there's prices flying around all over the show that are affecting the prices of each one. And not only that, but Phantom, Deuce, they might be in liquidity pools on other networks everywhere. Transactions are going on galore all day long. You know, so that are balancing out these liquidity pools all the time. So there's a lot of arbitrage going on. And then, of course, people are just buying in on speculation and other reasons why they're buying these cryptocurrencies, or for the genuine use cases to build a project on it and so forth. And it causes these liquidity pools, though, to keep doing this, you know, all the time, every second. They're making changes and helping with the fluctuations in price. But Phantoms, say a layer 1, that's why people invest in layer 1s and why they are the ones that tend to bounce or go up quite a lot during a bull run, because Phantom is burned as gas every time a transaction takes place on the Phantom network, as an example. Similar thing happens with Ethereum. Similar thing happens with Avalanche and so forth. So those layer 1s are burned as gas, so Phantom hence goes up in price from each transaction that takes place as well. Not saying it only goes up in price. Phantom definitely can drop in price due to other things, but that is helping the price, the transactions. Okay? So there's a lot of things at play. All right? And people are getting this high APR. The higher the APR, the higher the risk, generally. You know, it's a lower risk thing to put in, say, a Phantom USDT pool, you would think, than it is to put in, say, a Phantom Deuce pool. So there's I was going to say Phantom USDT, I would have thought would have paid out a lower APR, but it's obviously paying a high APR because Phantom itself is probably considered higher risk right now, and because there was probably a run on the bank here. They've probably lost a lot of funds from it, so the APR goes up. That's screenshot taken today. So in other times I've seen that be, say, far lower for that one. 2 stable coins here, 40%, so it's paying lower. Again, even that would have been much lower a few days ago. It's gone up probably because there's been a little bit of run on the bank, but generally the higher the interest, the higher the risk as well for that currency, and usually the lower the liquidity. Okay, low liquidity. However, people thought that Luna was very, very safe. It's a blue chip. They saw it in the same sort of vein as they saw Luna, just like they see BNB, like they see Solana and Avalanche. Even some people saw it as safe as Ethereum. It was seen as safe. So it was in some very large liquidity pools. And people saw UST as safe. So that was in many, many liquidity pools as well, all over the place. Okay, so that's fine if those currencies are not made with the tokenomics that they have, where they can auto capitulate in the way that they can. And like I said, they're in so many liquidity pools. So what happened is you've got your, what happens if Luna now is in a liquidity pool with Avalanche, let's say on Trader Joe as an example, but Luna's going to zero. But the liquidity pool is causing people to, or arbitrage bots and so forth, to basically, as this price goes down, oh, we will match it by selling some Avalanche to buy more Luna. But the Luna keeps printing itself, hyperinflation, so it goes down in price anyway, and it just becomes this never-ending spiral until that liquidity pool is drained of its money. Okay, and or at least gets very, very low. So that caused, say, Avalanche to do this, constantly go just straight down. Compound that with panic selling as well, and that, it caused that. But then you've got other altcoins like Trader Joe. So you've got this happening over here. Trader Joe, of course, it's in a liquidity pool with Luna. It's probably also in a liquidity pool with UST. And it's causing, because this is just constantly going down and down, it's going down with it, but very rapidly until that pool is exhausted. This is constantly going down until that pool is close to exhausted. Then it can start to go back up again because it's not being in that negative feedback loop. But that feedback loop is compounded by the fact that Trader Joe is also in a pool with Avalanche, which is also dropping because it's in a pool with Luna too. So there's this cycle going on where that's why you end up with this massive capitulation, on top of the fact that you also have people that are leverage traders that are longing the market, that suddenly they all got liquidated at once, stuff like that. It was just this big domino meltdown effect. Just got to move this back onto the screen back in so you can sort of see it a bit better. And, like I said, people were panic selling as well. But all of crypto, it's all intertwined in all of these liquidity pools and so forth. So that's why it all happened together. Look at the graphs. They all look the same. They've all got the kink in the same spot, the drop in the same spot. I mean, all the graphs are the same. Exactly the same. Even Bitcoin, exactly the same. They all got sucked into it together, all into the same spiral, unfortunately. And there are times in crypto when that happens, but this is a black swan event because it's not normal that I can't think of when one coin by itself, while the rest of the market was otherwise just, yes, in a downtrend, but not in a death spiral, it spiraled to nothing all by itself. Like it imploded all by itself. Just the one token alone went to zero. The other ones obviously had big drops, but that's not zero. That's just, an implosion, but it's not zero, and they're not going to zero because of that. Okay, so, there's historically, because of this interconnection, it is beneficial in reverse as well. It's the reason why, say, altcoins like, say, Phantom, it's a layer 1, and the first time around that Bitcoin went up to 64k, Phantom went bang, it went from 2 cents eventually all the way up to, it actually did go over $1. I'm not sure the graph doesn't show it here, but it went to $1.16, and and then it went down to 16 cents when there was the big crash, right? And then went through that sort of bearish phase, and then what do you know? It went even below 16 cents. But it went all the way up to, in the bull run, when all the coins are sort of going up together with it, and then people are extra going into the layer 1s, and the layer 1s are usually in more liquidity pool pairings as well, because they're on their own layer 1, they're usually in there, and they're getting burned as gas as more transactions take place, during a bull run. There's so many reasons why the layer 1s go up a lot more than others, like DeFi, layer 1s, and even now the gaming tokens to an extent, and a combination of gaming and layer 1s like a GameFi, they tend to go up quite a lot in these periods because of this big cascading effect. So it went up to $3.48, and then it went back down, and then it went back all the way back up again. Even while Bitcoin was going down, there was this a bit of a this was just people buying into Phantom itself. That was not a cascade effect, but it cascaded within its own liquidity pools, causing it to within Phantom, and all the Phantom tokens within it all went on their own bull run. Like within there were coins within Phantom that went from here to here during that time. It's kind of crazy how it all works. Okay, so So it's one thing, you know, to have belief in the project, and people buy into the project and they buy into it on sentiment belief. And there are projects that have value and they have their own little graphs. Not all the graphs look identical, but in short phases, when you end up with this cascading effect, then all the graphs can start to look relatively similar. And that's why, you know, you get that 100x move from there, or 50x move from here to here, or some coins went 100x from here to here. It's not just that people are buying that cryptocurrency, okay? Because people think, man, people must have loved Phantom and just constantly kept buying Phantom. It's not that entirely. It's the whole point that Phantom was also in a liquidity pool with, say, AVAX. It was in a liquidity pool with some other coin and some other coin and some other coin, and those coins may have also gone up or down, you know, during this time. So they went up, so then Phantom, you know, got bought to, you know, to maintain the peg for that particular liquidity pool, and it went up with it. Like the cascade that happens in the death spiral downwards in a bull run, you know, the death spiral downwards, we've just seen it play out. It also happens in the bull run upwards, is what I'm saying. So, like, if you're in a particular, and I'm not saying you should be going and aping into altcoins, by the way. I'm not saying that at all. I'm just more illustrating how and why, you know, it's a bit of a gamble at times in altcoin position. The safest coins are Bitcoin and Ethereum. Okay, they're the safest two, not counting, say, USDC or something like that, or, you know, not counting like a stable coin that truly is stable. So Bitcoin, Ethereum, the safest ones, but they aren't going to necessarily make a 100x move. So those that, if you do manage to somehow time the bottom for a project that is not going to implode, doesn't have tokenomics that can make it go to zero like Luna does. If it doesn't have tokenomics that can make it go to zero, if it's not a scam and it's got genuine utility, then, you know, it'll get dragged up with the rest of crypto, even if nobody is buying into that particular project to start with. Like, people might look at, say, DeFi Kingdoms and Joule, and some people in Joule might think, man, who's going to buy into Joule? Well, maybe they will, maybe they won't, but Joule will go up in price anyway if the rest of crypto is going up. It gets dragged up with Harmony 1, which is a layer 1, which is part of, you know, a lot of people's bags of layer 1. So it'll automatic, you know, that'll go up there, but then it's in liquidity pools, it will have that cascading effect, and then it's in pools with Joule. Joule is in pool. Joule on DeFi Kingdoms has its own liquidity pools. That's part of the beauty of it, and it's burned as a token on DFK chain. It's burned as gas. So there's so many reasons beyond the gameplay, just from a decentralized finance and its attachment into crypto, from that point of view, why it will go up with the rest of it as long as they keep developing and that particular project plays out the way that the developers have planned. That's not to say it can't crash way lower. So the biggest risk for a currency like Joule is loss of confidence if they ended up having to lay off staff and stuff like that, and then you could have a capitulation event could happen. But because of all the pools and everything, it probably wouldn't go to zero, and it probably will see a very bright future at some stage when there is a next bull run. So it's high risk, potentially high reward. In saying that, we could see that this Luna event as a black swan event may find a market bottom this very soon, and then as a result of that, we may find, yes, the Fed hikes and all of that stuff may possibly not be able to bring us lower than what this whole Luna debacle is bringing us. And I don't know if we've reached the bottom of the effects of this yet. So, you know, it's high risk, high reward if you're in any altcoin project. So that's why you dollar cost average your way in. Don't buy unless it's like one of the bigger dips. And, you know, potentially even don't buy into altcoins at all if you if it's not, say, a very low portion of your investment. If it's, you know, I'm not trying to shill a coin here. I'm just trying to just give some clarity as to what happened with the Luna thing. what can happen on the way up, but also, it's very hard to time the bottom. That's why I usually sort of dollar cost average my way down on the bigger dips. I'm looking more for the Fed to pivot and say, hey, there's no interest rate hikes this time, or something like that, to be able to think, yeah, this really could be a more positive indication of a bottom. I'm looking for something like that. But like I say, you never know, because this could have taken things lower than what otherwise would normally have been the case. But then again, to say that there can't be another capitulation event happen, is not to look at history, which has shown that, there have been black swan events where all of crypto can drop by quite a lot, and even more than it has yet. So anyway, I'll wrap this video up now. That's it for this particular video. I hope you understand this whole cascading effect now, what happened. Obviously, it can happen in reverse, but that's not giving you a bullish signal to say that we're at the bottom now, because we totally may not be. It's that's that risk reward side of things, and I do believe that crypto will see a lot better days. I'm just not sure when that time period will come. So that's why we look at the news, we look at those things. Only dollar cost average your way in. But these bearish times are also what has made most people, when it's gone from here and they've stuck through it, they're not sure where the bottom is, but eventually you do get this, and by being patient as well, it is, and it's just small accumulations. That's what's caused people to do extremely well in this particular market over time. Okay, so anyway, that's it for this particular video, and I'll see you in the next one. Bye for now, everybody.